Hello, everyone. Hope you had a wonderful trading week and a nice weekend. Apologies for the later than usual upload. I didn't get a lot of sleep last night, and so today I ended up taking a little bit of a midday nap and overslept by a few hours, to say the least. Again, apologies for that. Let's just go ahead and dive into it like usual. Here is the dollar weekly time frame view, and the dollar has continued to squeeze to the upside here. Again, now she's at that 61.8 fib level that I have marked here. And if she holds this level, then that opens the door for further upside push. Now, the next level I'd be looking for is around 99 to around 99.16 ish, maybe even hitting that 20 mark. But that would be basically the mid fib distance between the 61.8 and the 78.6 that I have here marked. So, again, the mid fib level around at 99.20 ish level, it's possible so long as the dollar actually holds on to the current support level. So again, as you can see, that is basically right here on that 97, 88, 89 level. Does have some work to do to get above that 98.37 level, so it could kind of churn and burn in here before it does try to make a move. It could be a fake out, so be on guard about that as well. We do have the FOMC minutes coming out on Wednesday, 2 p.m. Eastern Standard Time, so there's going to be a lot of action going on around that time, as most of you that have been trading for a while are familiar with at this time. So, again, still thinking that we're going to be heading down again under to the 95.70 zone in the event that we break below this 97.89 level. And I still think that is probably the course we go to. The only way I could really see us continuing to go to the upside here, again, beyond just holding this level, is that the Fed actually either doesn't do a rate cut or the rate cut is much smaller than anticipated or hoped for by the market, and that is basically what would trigger that short squeeze to the upside for the dollar into that 99 level up to 99.20. But otherwise, if she fails to hold this and breaks down after the FOMC minutes are come out, then 97 support will be tested, and it'll probably start trending to back to the downside into those 95 70s. So let's go ahead and continue to move forward here. Looking at gold, which has had a very nice strong week here, still being quite resilient overall. So again, very good here. That just basically means that safe haven bids are continuing to come in. All right, now that the chart finally loaded, let's continue on. So as I was saying, gold on a weekly time frame view looking beautiful here. Very nice run up into this 1540s, 1550 level, I believe was touched briefly. Again, we need to see some consolidation at this time. I think we're going to end up pulling back down to around those 1470s, as I mentioned about a week or so ago. 1470, 1465-ish could be the zone that she takes a little bit of a break to, and then we'll start seeing again the price catch those bids. So basically looking at a nice little downward push. So from here, basically 1524 should end up holding. We'll start drifting back down to around 1506 or so, catching some bids in there for some quick flips probably, and then after another rejection down into around maybe that 1470 zone, and then again look for another push right back up into around 1550s or so. It's going to be, it's going to take some time to get there, but again, the main key here is so long as she holds around those 1490s, then it's possible that she's going to continue to chop around in this area, but that level breaks, then those 1470s become a real possibility, and then we start looking for the dip and then rip type of price action. So again, end of this week, I think that we're going to see quite a lot happening here overall. The level of this retracement is the one thing that I have the real concern with. 1490 was very heavily defended, several sessions ago. And again, that's a level that I still have in the back of my mind is probably holding up, but I have to give it the benefit of the doubt that the chart does, in fact, show that the price will come back to the 1470s. I give it probably a 20% probability just on my personal, just what I'm thinking. 1490 is a level that definitely should get touched, or at least come close there too. And then again, still seeing the same upside push after the FOMC minutes come into or are released, I should say. So again, kind of speaking a little bit gibberish mode. Still not fully acclimated to being back after my just off day. I don't usually take a midday sleep, so it was a little bit off for me. As far as natural gas is concerned, she had a very nice push up towards the end of the week here. Finally got that move above the 2.15, ran into the 2.216 area that I had marked, and a little bit further of an extension into the 2.265. Now, again, as you can probably see, we are again in a little bit of a range here between these 2 points, so between 2.16 and around 2.226. We do have an expected consolidation area now. There is going to be a lot of resistance at this 2.22 level. It's possible that we could see a little bit of a push into around 2.25. I need to see what happens once we fill this overnighter. After that, probably see some chop at this area. If she fails to hold the 2.14 zone, which is again very key for me from what I see according to my fibs, then we'll be looking at again another push down into those 2.03s and possibly seeing a little bit of a bounce at that time to 2.07, 2.06 ish, and then those 190s might come into play. Can't rule it out because, as I said a few videos ago, that is a very real possibility. We are looking at a lot of chaotic price action in this overall area, and again, I'll zoom out for those of you that may not have watched those videos, but looking back in time, our bottoms back in 2016 were right around those 167s to 190s. We started to breach into the lower twos already. A lot of people were very confused by that part, and I said, the historical range for natural gas is actually under to around two, low twos. So the fact that we were up here for so long in a supposed good economy, strong economy, and now we're looking at weakness again, looking at price coming right back down. I don't know when we're going to get to 160s, 170s, but I know that 190s will be here sooner than later. So I am watching very closely to see what happens this week with these 2.22s. If she goes ahead and continues to consolidate or makes that 2.22 a nice solid support level, then that could give a nice probability for another further push up into around those 2.34s. So it's going to take a little bit of time to get there. I will be patient. I suggest you all do the same. Lastly, looking at crude oil here, crude is also trying to get some upside push here yet again. I'm going to go ahead and just cut this fib out of here to keep it simple and not all cluttered. Again, we are looking at upside push here, trying to get back into around, looks to be around 56.30, 56.40, and then from there, which I don't think we'll be able to hold those prices, we'll start seeing another corrective action here back to around 54.50. She breaches that level, we'll be back in the 53.80s before you know it. That's the weekly 200 MA, and then beyond that, another retest of the lower 51.50s to 50.70s could and should be expected. But upside, as far as I'm concerned, looking at 56.40 around 57 as the absolute top here. I don't think that these prices are even justified at that level. I know some of you are not probably liking that, but the reality of the situation is we are in a slowing economy, and we've been slowing down for some time. Most of us that are on top of this economic news, but now the reality of that and that sentiment is starting to catch up overall to what's being released, and how the price action is actually starting to reflect the slowdown. So again, looking at the overall just trend lines, trying to keep it as simple as possible for everybody that can follow along. 56.20 around 56.40, maybe 50s could be hit. Don't think we'll be trading up into the 57s. If we do, it'll be a short pop up, and then it'll be quickly sold into, just like we have seen over the past few sessions. We had a very strong hammer here. We did not get the follow through in the last weekly candle. So this one again, it's going to be quite erratic. So again, as always, please use your stop losses. They save accounts. They give you flexibility. If you're wrong in one instance, you can always get back in and make back the difference that you lost. That's the name of the game, risk management. I hope you all have a wonderful and green trading week. If anybody's any questions, comments, concerns about anything I've posted here, you can always obviously leave them at the bottom. You can email me, thetradersperspective@gmail.com. And, don't forget, there's also the new 2-week free trial that I do offer. And so if you're interested in further analysis that I do provide, just go ahead, visit me at the website. You can read all about it, and then again, if you have any questions, just don't be hesitant. You can reach out to me at that time. So again, green trades to you all. Have a wonderful trading week.